So yesterday I read an interesting article regarding the China selling of US Treasuries. So Michael Pitt is one of the best Chinese economists and writer, noted that if China likes to sell US Treasuries, which it has been holding for many years to balance its surplus, state surplus, because China exports a lot of products to the rest of the world and trades in the US dollar. The global trade is dominated by the dollar dynamics. And if China would sell these assets, it has to divert that to other economies. For example, if China likes to buy European Union or Japanese government bonds, it will take the euro or the Japanese yen to go higher, because what happens in the last 20 or 25 years is that the US open capital account helps the Chinese to stash the surplus in the US Treasury market, which is a very liquid market. So, if China wants to eliminate the US equation, it has to acquire a similar amount of foreign net assets in other economies. So, the problem is, if the European Union or the Japan is willing to take the Chinese investment in the local bond market, because with EU they cannot able to spend a lot of money on infrastructure or any debt funded investments into their economy. So this is politically naive or politically impossible for them to do that. They have their fiscal breaks and debt breaks. So perhaps also the Chinese investment would be seen as an politically offensive for them to accept that. Also, it will push euro higher, which makes their exports dearer to the rest of the world. Same to the Japan. Percent of its GDP, it's in debt. Its debt to GDP is 250%. And if you want to look at how the Japanese government bonds trade, it's very deep but not liquid. It's mostly owned by the Bank of Japan and some of the financial institutions. Japan has already spent a lot of capital on infrastructure and other projects despite fighting deflation for the lot of years. So they have no room to take Chinese